Hey, Jody Klinger back here with you. Thanks again for checking this one out. If you've seen some of my other videos by now, or maybe you've nosed around or picked around on the website and you saw that there's about 20 different core areas that commercial underwriters evaluate when they're determining your insurance premiums. In this quick video, I simply wanted to explain to you the top 5. And I'm just going to keep this at a high level perspective just to kind of give you some context, help you understand a little bit about what goes on in the minds of an insurance underwriter, how they evaluate things, and more importantly is how you should leverage this to work in your benefit. Because when you understand how to properly leverage it, you can actually get the insurance underwriters to know a lot more about you than what they are assuming, feel a lot more comfortable about your business and your overall risk. And as a result of all of that, they can get a lot more competitive and really start driving down your cost to see some meaningful change in your overall insurance premium. Now, you might be thinking, or you might have wondered, where do these insurance premiums that I'm paying every single year, where do they come from? Where does it all start? I mean, how do they even come up with this? And that's a long answer, but in short, the underwriters that are assessing your business and ultimately pricing your insurance, before they ever start looking at price, they really dig into these top 20 areas that I'm mentioning here. And I'm going to highlight 5 of them here in this video for you. And they focus in these areas because this helps give them a full picture of your overall operation and the risks and the hazards that it presents to them as an insurance company if they're the ones writing your insurance program. The problem is most people don't ever fully communicate everything that an underwriter needs to know in order to make a full assessment. As a result of that, these underwriters make a lot of assumptions. And when they make assumptions, they're usually thinking worst case scenario, and those assumptions will lean in favor of the insurance company, aka higher pricing, because they don't know anything about you. And if you don't know enough about somebody, there's a lot of uncertainty. There's a lot of risk in that, right? So that's one of the things that I wanted you to first understand. The fact of the matter is let's just get into the top 5, again, high level, just to help you understand what an underwriter is really thinking about. The first thing that they're going to evaluate is your operations. What do you actually do in your business? What do you serve? Are you a service provider? Are you a manufacturer? What does that look like? How complex is it, the product or the operations that you have? And overall, where do the exposures sit? Is there a potential for bodily injury claims, property damage claims, a combination of the two? And how big of a potential exposure is it? So those are some things that they go into. And not so much what you do from an operational standpoint that you have to think about is articulating, but how well can we explain it to an insurance carrier? Because if it's vague or it's generic, as I said, the underwriters are going to assume the worst. So the more that we can share with them, the more that we can tell them, the better it is, because they get more and more comfortable feeling that they got their arms wrapped around the risk. They understand it. They feel good about it. They think there's enough controls in place. So hopefully that makes sense. The second area is safety. I'm sure you knew that one was coming. It's the number one word probably I hear in my industry. But it's not important just to say that we're a safe work environment or we have a safety manual or a safety a program in place. We want to be able to articulate how is it actually implemented in a day-to-day basis. What kind of training do we have in place for our employees? What kind of accountability do we do? Where are we consistent? And what are the things that are most important? Because at the end of the day, these areas are the probability of where something's going to happen. If we don't have a safe work environment, we have potential for employees to get injured. If we don't think about safety, there could be products that ultimately cause harm to somebody, or services that we're providing could cause harm to somebody else. So safety is kind of the cornerstone around a lot of things, and you've probably heard that word a million times. Anyhow, you get the idea. The third area is all around claim history. Not so much just about the frequency of claims that you have, and I'm talking claims across all of your lines, workers' comp, auto, property, liability, everything. So not just the frequency of the claims, but more importantly is how do you respond? And they're looking at what do you do when a claim actually happens? How do you control the process? Do you have an investigation process, a procedure? Do you try and figure out the root cause as to why it happened? But more importantly is what are you going to do after the fact to make sure that this type of claim doesn't happen again? They want to know that you've learned from your mistakes. And I don't want to refer to them all as mistakes. Sometimes they're sheer just accidents that happen, but it results in a claim. But they want to see how can you potentially re-engineer something or rework something to reduce the probability or likelihood that that same type of claim could happen again. Anyhow, you get the idea again. The fourth area is return to work or light duty. Now, I touched on this in some other videos. You've probably heard about it. But the ability to bring your employees back to work in some form or capacity after an injury happens has a major, major impact on the overall severity or the size of the insurance claim when it comes to workers' compensation. And underwriters, this is the ones that are doing workers' comp, this is the number one area that is most critical to them. And if you don't have a comprehensive program that is very well documented and well executed when an injury happens, this is a major, major gap that most people fall into, because this here is really what's going to be able to drive the price up or down in one direction or another, whether you have a very well comprehensive program in place or you do not. The fifth area is all around risk control. And that's a broad term, but overall, what kind of systems, what kind of processes, procedures, documentation do you have in place? And is it consistently managed? Again, it goes back to the whole safety manual. Just having a manual in place for risk controls is not a check mark that, hey, we do this and we have a manual for it. How is it being implemented? And we have to be able to show them how we utilize all of this and how it ultimately translates into being a lower risk for the probability of a claim, and AKA a lower risk to the insurance company. So again, this is where most businesses lose their leverage, is they just don't have a core foundational understanding as to what's being evaluated, and they don't really understand how to properly communicate it and articulate it to the insurance underwriters who are ultimately creating the pricing structure on what you're going to end up paying every single year. Now, again, this all comes down to presentation and proposal and giving everything to the underwriters so that they can make an informed, educated decision on your premium. And more importantly, is they can feel comfortable and get more competitive to be able to win your account and keep your account, because they know that you're a well-managed or a well-oiled machine. So again, I hope this video helped. This is just the top 5. There's about 20 core areas, but hopefully you get the gist of it. There's more videos below. There's some other context below. If you want to dig into any of these topics a little bit deeper, have a more comprehensive understanding of it, I'd be happy to reach out or set up a 5-10 minute phone call together and discuss any of these or any of the other items in more depth. Thanks for watching, and we'll see you on the next one.